So let's go ahead and master the golden breakout strategy. The Clarity Forex Ultimate Golden Breakout Insane Strategy. We're going to go over everything. This is going to be putting it all together. So make sure you guys pay attention, man. Grab your snacks. Do what you got to do. Sit back, relax. This is the most important section right here. This is what's going to get you to that next level trading Forex. Okay. A couple things we got to do. Okay. Overall, this is going to be the gist of how the strategy works. The next two sections, we're going to get into the details of trading gold, the details of trading GJ, and the details of trading NASDAQ. Okay. First things first, you got to pay attention to the session. That's the biggest thing. What session are you in? If you are not in the New York session, do not trade NASDAQ. And this goes back to the sessions area section that you guys should already know about. We only trade certain pairs in each session, as mentioned previously. Okay, mention it again. The next thing to look at is the overall market structure on the 5-minute chart. We don't really look at the daily. We don't really look at the H4. It's very rare that we ever do that. We really just, on the 5-minute, every day, just going through the 5-minute. We don't care about nothing else. We are scalpers. We don't care about the bigger picture. It really doesn't matter unless there's a huge news event or something's going on where it's only buys, and then we'll pay attention to that. But that's very rare, okay? So mostly we're on the 15-minute, and the 5-minute, excuse me, and that's all, okay? And that's step number 2. We got to see that there's volume, okay? Because we have to have volume to create breakouts. If there is no volume in the market, then we don't trade. It's very simple. Now, there is a volume tool. I don't personally use it, but you can use it. It will indicate when volume's picking up. Okay, I'll show you guys how to put that in a second. I don't really use it because I can see with my eyes if there's a lot of volume or not, so I don't typically use it. But again, you cannot trade breakouts if you have inadequate volume. So make sure that there is volume. Now, what I mean by that is make sure price is moving fast. Make sure that the candles they have some speed to them. Because when it starts to break out, you need to take your sell or your buy position, and it's going to happen fast. You need it to happen fast. Because if it's not happening fast, you're going to consolidate, and there's a good chance that you might get taken out. So let's make sure there's volume, okay? So I'm going to go over the first 3 steps one more time. Okay, let's say we're trading NASDAQ, for instance. We're going to wake up. It's going to be about 6 a.m. when the volume picks up, when the session starts. Okay, so we make sure there's volume, make sure price is moving fast. We're looking at the right pair, which is NASDAQ, during the New York session. Okay, and then we're going to look for either a breakout below support for a sell or a breakout above resistance for a buy. And we already talked about this, but here's some good examples. We have support. We have a lot of volume. Price is falling hard. You see these huge candles here. We're going to take our sell position when we break below that support, and we're going to take our buy position when we break above resistance. Okay, so let's look at it as a floor or a ceiling, because price cannot break above that ceiling. Price eventually does start to break above that ceiling. And remember, we take our buy or our sell on candle movement, not on candle close. We don't wait for this candle to close up here because we're going to miss out on all these pips right here. Now, as a scalper, all this right here that you would have missed, it's a lot of pips. Okay, so we want to take our buy position as it starts to come about right here up towards these wicks. Take our buy, stops below down here, and we just go for about a 1 to 4 on average. Okay, so very simple, but again, we're on session, the right pairs getting traded, and there's good volume in the market. Okay. Now, after you enter your trade, there's a few guidelines you want to follow when it comes to taking profit. Okay, so let's say, for instance, our entry is here on this break. Let's have a 10 pip stop loss, right? Just have a 10 pip stop loss. Remember, this is for GBP JPY. For NASDAQ, we're going to do something different. It's going to be a 25-point stop loss, which is really 250 pips. So again, let's say we have a 10 pip stop loss. This is just an example. You can use as many pips as you want. For me, GJ, I'm using 10. NASDAQ, I'm using 25 points. Once again, we enter. We have our 1 to 1. And we're going to set our stop loss to -5 pips instead of 10 once we hit that 1 to 1. Once we're at a 10 pip profit zone. Once we get to that 1 to 2, 20 pip zone, we can then put our stop loss to entry. From there, we get to that 1 to 3. Let's go ahead and take our stop loss from break even and start to trail. And we're going to take our stop loss that we're going to follow. Boom. As price is moving, we're going to follow it. We're going to trail it. We're going to follow it. We're going to follow it. Now, once we get to that 1 to 4, trade's complete. Okay, you can take your profit. I always go for 1 to 4. Now, if you're not satisfied with the 1 to 4, continue to trail that stop loss, take some profits along the way, and continue to see how far you can get while trailing your stop loss. Okay, it's very simple, guys. Again, 1 to 1, stop loss around 5 pips. 1 to 2, let's put our stop loss to entry. 1 to 3, we're going to start to trail that stop loss a little bit. Not too much, nice and slow. And at 1 to 4, we take our profit, or we continue to trail our stop loss down. So I'm going to go over some live examples, show you guys exactly how it's going to all go down, and we'll go from there. Okay, so here we're looking at NASDAQ. Okay, overall, market structure is bearish because we're creating lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, so on and so forth. Now we got to find support. We need to find a support break because we're looking for a sell. If it's a bearish move, then we got to find support because if you're going down, you need to find a floor. Now the floor is what we call support. Price usually stands on it just like this. But eventually when you break through a floor, you're going to continue to fall because there's nothing under that floor. So I'll put this in replay mode to show you guys a little bit more in depth of how we're going to take this trade. But again, okay, we're falling. We actually find a little bit of resistance here, former support. So we know price is creating nice bearish moves. It's a healthy trade. We got that support line right here. Now, if price starts to break this support down in this area, I'm going to take my short position. I would prefer on a trade like this, we could probably even go tighter stop loss just because there's not a lot of wicks here. So the support really did get breaking through right away. We could probably do, I would say, a 10 to 15 point stop loss. Now, the reason I'm not doing my average 25 point stop loss, not only is that because of the wicks that aren't here, but because price is already so far down. Just on that one candle as we entered, price created a strong bearish move. I don't think price is going to come back to this area, and I really don't think price is going to come back up here. Now, if I do a 20 point, 25 point stop loss, I mean, that's me saying that price may come all the way back up here. I don't believe that. And if it does come back up here, it's most likely going to continue to go. So we'll go with like a little 10, 11 point stop loss. And again, we'll just target a 1 to 4. We don't got to go too crazy on it. But now that I can see we're at a 1 to 1, I can adjust my stop loss to about half. Happened fast. Now we can put our stops to break even. That was fast. And this is how breakouts happen. If you do it right, you do it during session, and you actually wait till there's good volume, this is how they're going to happen. It's going to happen like that. You're going to get in and you're going to get out. And it's going to be very smooth, very fast, easy transition. We wait till the next pair, which would be GBP JPY later that night, or we wait till the next day, trade NASDAQ again. But it's that easy. All right, so here's another quick little example. Lower lows, lower high, lower low, high. So what do we know? We know for a fact we're in a bearish market structure, right? Because we're trading to the downside. Okay. Although price overall was bullish, we started to create lower lows and lower highs. So we know price is trending down, right? Because we can see it. We can literally see it just inside this little bit of a channel. Now, if we know we're trending to the downside, once again, we want to find support. We want to find that floor, that ground where we can see that price is bouncing and we can see it break below. So let's create the average right here where those bodies are. We have support. We could even say we already have a trend line break, but we'll go with support just to be safe. So we're going to look for support to get broken. It's not really support yet, but if price even comes near this zone, well, then it will be support because we have 1, 2, and now it's going to be 3 touches. Boom. There it is. Price starts to break below. And it breaks below again. Take our short position right around there. Could do a little 20 point stop loss. 1 to 4. And boom. A little bit of a retracement for a second, but take profit got hit extremely fast. It's another simple trade. Now, again, it's not rocket science, guys. It's very simple how we trade. Overall market structure is going down. We find support and we find a support break. That's a sell position. Okay, so now let's look at this case. Overall market structure is going up because, again, higher highs, higher low, higher high, higher low. We know we're going up. Okay? Now, if we know we're going up, and I'll put this in replay mode to show you guys again. We know we're going up. We're going to look for resistance. Very simple. Majority's right here. We have resistance. Now, we want to see a nice bullish, bright blue, or if you guys are trading differently, green, whatever your bullish candles are colored. We need to see a bright blue, bullish move above all of this bullshit right here. I mean, all of this resistance. Once we see that, we're going to take our buy position. Right here, we still haven't really showed a great bullish move. Now we are. Now we're showing a great bullish move. So we have overall market structure saying we're going up. It's a bullish market structure. We found resistance. We start to break above that resistance. As we start to clear all of those wicks, we'll go there. We can go stop loss about 10 points. Could do a 1 to 4. We'll see what happens. Very fast. We had a lot of volume come in. So it happened very fast. It's a beautiful trade. Okay, we caught 420 pips. We only risked 100 pips, so that's a 1 to 4. We're good for 4 more trades. We can now lose 4 more trades, and we'll still be good. We'll still be break even. It's a great bullish example right there. Okay, guys, another example, a very simple example. As you guys can see, overall, market structure is extremely bullish. Higher highs, higher lows, higher highs, higher lows, higher highs. We're doing the simple stuff, the higher highs, the higher lows. But we got that lapse. We got that wedge. Remember we talked about this. This is a very simple pattern, but this is a wedge channel pattern. Look at that. It's a beautiful pattern. All we have to see to take this buy position is price break back above, because this is a descending wedge, right? We're going down, but overall, market structure is bullish. We're going up overall, but we have a small lapse in the market where we're creating a bearish wedge. Now, if we break out of this wedge, we take our buy. Guess what else we could have said? We have resistance here because we're looking for a buy. We're going to look for resistance. So as price, let me rewind that. As price starts to break both of these, whether you were looking for the wedge breakout or the resistance breakout, we take our buy position. And because our buy position is on a full candle, there is going to be sometimes, most of the time, retracement. So like I said before, you take your buy here and the candle ends up closing way up here, well, then you have a tight stop loss. But because this candle is so big and you're getting in at the very end of it, you want to have a better, tighter stop loss. I mean, more open stop loss. So we could do like a 20, 25 is fine. We'll still go for that 1 to 4 and we'll still adjust our stop loss. Okay. As I said, there's going to be retracement. And we let the rest play out. It's another 1 to 4. It's a simple setup. Whether you were like, let's look for the wedge, or you said, let's look for the resistance breakout. Either way, you got it. You got it either way. That's how simple the strategy is. That's how simple the setups are. You could have said, nah, I think this is more like resistance here. You still would have caught that buy and still would have won. Nah, I think this high is more like resistance. You still would have hit this buy and still would have won. Okay? Obviously, you don't want to get in that late, but I'm just saying that's how deadly the strategy is. Okay? It's a beautiful buying opportunity. That's just, it is what it is. It's very simple. Now, that's the gist of the strategy. I mean, not even just the gist. That is the strategy. That's how we trade. Market structure, bullish. Let's find resistance. That ceiling. We break above that ceiling, take our buy. We have a very simple 1 to 4 risk to reward. We trail our stop loss, and we watch it play out. Now we're looking for a selling opportunity. We need bearish market structure. Let's find that floor. Let's find that support. We start to break that support. We take our 1 to 4, and that's it. As long as we got volume, we're going to be okay. We're going to make our money, and we're going to get out of there. It's that easy. It's that simple. Seriously. Back test, practice. You guys will see exactly what I'm saying. It's really that easy.